Good day and welcome to the webinar. We are going to deal today with a webinar on reporting obligations, and with me today I have Phahlane from the FICA, as well as Khanyisa and Philip from the FIC. They will introduce themselves, and my name is Michele Fourie. I'm from the FICA, in particular the FICA Supervision Department in the Conduct of Business Division. Khanyisa and Philip, would you like to just introduce yourselves?
Good afternoon, everyone. My name is Khanyisa Ngozwana. I am from the Financial Intelligence Center. I'm the manager for data systems and reporting.
Thank you, Khanyisa, and welcome.
Good day, everybody. My name is Philip Langenhoven. I'm also with the Financial Intelligence Center, the Compliance and Prevention Department. Thank you.
Thanks, Philip. And Violet? So Violet is also from the FICA Supervision Department in Conduct of Business Division. So as I mentioned, a warm welcome, and we're going to spend some time today to look at the reporting obligations in terms of the Financial Intelligence Center Act, in particular sections 28, 28A and 29, and importantly also the money laundering and terrorist financing control regulations. And the reason we are making this webinar available is we would like to provide some practical information to hopefully promote compliance with the reporting obligations in terms of the Financial Intelligence Center Act that is placed on our accountable institutions. So just a little bit of background. I mentioned we are from the Financial Sector Conduct Authority, and we refer to ourselves as the authority. We were established as a market conduct regulator in terms of the FSR Act. We were previously known as the Financial Services Board, but we are not just a market conduct regulator. We are also designated as a supervisory body in terms of the Financial Intelligence Center Act, or then the FIC Act. And we have an obligation to ensure that the accountable institutions that we supervise complies with the FIC Act. In particular, the accountable institutions that are listed under items 4, 5, and 12 of Schedule 1 to the FIC Act. Just to note that that includes authorized users, financial services providers, and collective investment scheme managers. Now, the supervision of authorized users have been delegated by us to exchanges in terms of the FIC Act, and we also are collaborating today because we have a memorandum of understanding between ourselves as the authority and the Financial Intelligence Center. To tell you a little bit more about who the Financial Intelligence Center is, I'm going to quickly hand over to Philip so that he can give you a brief. Over to you, Philip.
Thank you, Michelle. Yes, the Financial Intelligence Center is the Financial Intelligence Unit of South Africa, which means we are the body responsible to gather information and assist our law enforcement agencies in their work by providing them with financial intelligence. So we are established in terms of the Financial Intelligence Center Act, and our office is in Centurion in Pretoria, and we receive information. That's our main purpose, is to receive information from institutions such as yourself, analyze that information and share that information with our law enforcement agencies. Our legislative mandate, just to make it formal, is to assist to identify the proceeds of unlawful activities, combat money laundering and terrorist financing, and we also assist with the implementation of financial sanctions. And that is targeted financial sanctions as a member, South African member of the the international body to make sure that their targeted financial sanctions are being implemented. So the FIC also shares information with law enforcement agencies, supervisory bodies, intelligence services, the South African Revenue Services, and other international agencies, including institutions such as ourselves in other parts of the world. We are obliged to supervise and enforce compliance with the FIC Act. Our specific focus today will be on reporting obligations, including the FIC Act and how this relates to the GOML system. So my colleagues will give you more information on that.
Thank you, Philip. So it certainly sounds like you have a very important role as it relates to identifying the proceeds of unlawful activities and to combat money laundering and terrorist financing. And the goal today is to provide and shed some light on how that can be done in relation to the reporting obligations that are placed on the accountable and reporting institutions. So just on a very high level and from an introductory perspective, the reporting obligations are set out in the FICA Act, in particular sections 28, 28A and 29, but it's important to read those obligations with the appropriate regulations, as I've mentioned in the introduction and the opening, because those regulations provide details of the time frames and the type of information that must be provided under each relevant report type. And if this sounds foreign or unusual to you, hopefully by the end of the webinar, you are going to have a good idea of which report types are available and how you should comply with those reporting obligations in terms of filing the appropriate reports. So I'm going to hand over to Violet to quickly deal with who must be reporting to the FIC. Violet, over to you.
Thank you very much, Michelle. I'm going to go through with you in terms of who must report to the FIC. Actually, all the accountable and reporting institution must report to the FIC. However, for the purpose of this discussion today, we are going to include item 5, a manager registered in terms of the Collective Investment Scheme Control Act number 45 of 2002, but exclude managers who only conduct business in Part 6 of the Collective Investment Schemes Control Act. Also, item 12, which relates to a person who carries on the business on financial services providers, requiring authorization in terms of the Financial Advisory and Intermediary Services Act number 37 of 2002, and to provide advice and intermediary services in respect of investment of any financial product, but excluding the short-term insurance contract or policy and a health service benefit provided by the medical aid schemes. We can proceed, Michelle. And the next question will be, why must an accountable or reporting institution report to the FIC? Every accountable institution is required to comply with the reporting obligations in terms of the FICA Act. Reporting this financial information, financial intelligence enables the FIC to fulfill its mandate in relation to identifying the proceeds of unlawful activities and combating money laundering and financing of terrorism and related activities. Registration with FICA enable accountable or reporting institution to comply with their reporting obligation in terms of the Section 28, as previously mentioned by Michelle, and Section 28A and 29 of the FICA Act. Through the registration process, this enables the accountable institution and the FICA also require information from the accountable institution in terms of Section 27 and Section 32 of the FICA Act. The next one will be when must an accountable institution report to the FIC? In relation with the cash threshold reports, these reports must be filed with FIC as soon as possible, but not later than 2 days after becoming aware of the transaction. In relation to properties associated with terrorist and related activities and financial sanction pursuant to resolution of United Nations Security Council, this report must be filed with FIC as soon as possible, but not later than 5 days after establishing that the AI has the properties under its control. And in relation to suspicious and unusual transaction and activities, this report must be reported to FIC as soon as possible, but not later than 15 days after becoming aware of the transaction. I will hand over to Michele to take you through the type of reports. Over to you, Michele.
Thank you, Violet. And it's very important that you share this with our viewers, because I think emphasis really should be placed on the as soon as possible, which is in fact the requirement. And we're going to deal today about how we can make sure, with the help of and guidance and expertise of the colleagues of the FIC today, that you actually meet these timelines. So with the amendment of the FICA Act that came into effect in 2017, the type of reports has been expanded. So as you can see, there are terrorist property reports, cash threshold, including aggregation reports, suspicious and unusual transaction and activity reports, as well as terrorist financing transaction and activity reports. So it's important to pay close attention today, since there are new reports, and we're going to focus on how you should report all of these kind of activities and transactions to the FIC within the prescribed timelines. We're not going to focus today on how to identify reportable transactions or activities per se, but rather the process of what you should do to file an actual report. So with this high-level background in mind, I would like us to get some assistance from an input from Philip in terms of what does the FIC do with the information reported by an accountable institution, because often failure to report or resistance to report is rooted in the fact that the importance and the significance of the financial intelligence reported to the FIC is not always widely known. So Philip, tell us, what do you guys do with the information that you receive from accountable institutions?
Thank you, Michele. Yes, as I mentioned earlier, the primary purpose of the FIC is the production of intelligence reports, thereby assisting our law enforcement agencies to do their work and to build cases against alleged criminals. Now, for that, we receive information in the form of regulatory reports and also international information from our counterparts in other countries. All those reports, and that includes all the reports that Michele mentioned now, those reports are then integrated with other information that we obtain through our databases to which we have access. That includes government databases, it includes the media, academic publications, searches, and so on. So we can typically take the information that you've provided to us, and we combine it with all these other sources of information. Then we come up with an analysis. So to make sense out of the information, we then do an analysis of that. And then the product that we actually then produce is, in the form of an output, is a financial intelligence report, which can be in the form of either proactive disclosure, where we provide information to our law enforcement agencies, or a reactive disclosure where we respond to requests for information from them. With this information, our law enforcement agencies and our investigators, criminal investigators, are possible to determine or are able to determine, what kind of assets people invested in, what policies they took out, where did they buy a house, what bank accounts do they have, even where did they use their credit card, for example. And that information is then used to assist our law enforcement agencies to build cases against criminals. You can go over to the next slide, Michelle. So we have here what we regard as the life cycle of a regulatory report. So what happens to a regulatory report? It all starts with a risk or a trigger with you. So our accountable institutions become aware of the fact that something appears to be suspicious to them, make them realize that it might be unusual. So they then decide through their institutional internal processes whether to submit a report to us or not. If they decide that the report is to be submitted to us, then that report will be submitted on the GoML system, and Khanyisa will at a later stage explain to you how that is done. And that will then end up with the FIC. It'll form part of our internal process, as I've explained earlier, where we combine it with other information, and then that ends up in a proactive or a reactive financial intelligence report. And that information is then shared, as I mentioned earlier, with our law enforcement agencies. We also have, in terms of Section 40, we can share this information with the Public Protector, the National Prosecuting Authority, the Special Investigations Unit, Intelligence Services, our foreign counterparts, even the Independent Police Investigations Directorate, and SARS. So all of these institutions have memorandum of understanding with us, and they use our information that we provide to them. We just have a slide on a few other relevant sections in the Act that enable us to do our work. And the first one that I would like to refer to is Section 27. So in terms of Section 27, we can ask you to provide us with information on a specific person. We can ask you whether a specific person or institution is a client of yours, or whether they have been a client of yours during the last 5 years. That's also why your record-keeping processes is so important. Then also in terms of Section 32 of the FIC Act, we are allowed to ask for additional information. So once you've submitted the report, we can then ask you to provide us with more information on that person or that institution. Section 34 allows the FIC to close an account for a period of 10 days, which then enables the law enforcement agencies and the police to continue with the investigation into that account or that transaction. And after 10 days, then the bank or whoever holds that account of that person are then able to continue with the transaction. Then I must also refer you to Section 38, which gives protection to people making reports so that they don't have to then testify in a court of law against the person on which they make the report. Obviously, also it goes without saying that financial intelligence reports should be treated as confidential, and the information must not be shared with anybody else.
Thank you, Philip. And I think on that basis, the fact that the information is sensitive and it has to be treated confidentially, and probably also with the volumes of your reports, we have to take a closer look just for a second on the manner of reporting to the FIC. So I think today, with the information that the FIC is going to share with us, we will be able to appreciate that a prescribed format exists detailing the manner of reporting to the FIC, exactly for the reasons in terms of confidentiality and volumes and being able to analyze this data like you referenced, Philip. And this is to obviously be done electronically on a system that is hosted by the Financial Intelligence Center, by the FIC, and the system is called GoAML. But of course, You will not be able to access GoAML as an accountable institution if you've not been registered as yet. So we'd like to just quickly refresh your memory. We issued a webinar on our YouTube channel in August this year, where we also collaborated with the FIC, and they provided a lot of data to assist you with registration, any hiccups you may experience with the registration process, and importantly, making sure that your information provided on registration is maintained and it is up to date. So if you haven't had a chance to look at that webinar yet, you're welcome to go to our YouTube channel. It is available there, and you will need that knowledge so that you are empowered to actually access GoAML and file your reports with the FIC. So let's get into a bit more detail of, we know that there are reporting obligations. We're starting to get an idea of what the FIC is doing with the information. But really, if you're an accountable institution wondering what information would be required for purposes of reporting to the FIC, you are going to be in for a treat, because Khanyisa is going to explain to us exactly what this information entails. Khanyisa, I'm handing over to you.
Thanks, Michelle. So as it has already been mentioned, when you are submitting reports to the FIC, they have to be in the prescribed manner that the FIC has defined. So now I will take you through the information that you will actually need to have in order to submit then your reports to the FIC. So firstly, you need to identify the parties that are involved in that report. So when you are reporting a transaction, there are always two parties to a transaction. It's the payer and the receiver of the funds. So you have to disclose both of those parties as part of then your report. So when we are talking about parties, we are referring to a natural person or an entity or an account. And one of those parties has to be my client, which then means that you have to provide the full details of then that particular party. And in certain instances, you will have two sides, both parties reported as my client. For an example, when you are reporting a transaction done between you and your client, you will be then reporting the client as your client, and you will be submitting your details as well as the receiver of the funds, but I will touch on this a bit more later. So I mentioned that you need the information of the parties that are involved. You also need then the details of the transaction or activity that has then prompted the report. So if you are reporting a transaction, you need to provide the full details of the transaction. So information like then the amount and when the transaction occurred and where did it actually occur. And same details would be required for an activity, where then you would report when did that transaction occur and what actually happened. So you would need to submit that. And then in addition then to the party information and transaction and activity information, you'd also need to report the goods and services if there are any involved in that transaction. So when we talk about goods and services, we're talking about things like then the property or a vehicle, or maybe there are coins that are being bought, or an investment. So that's what we are referring to. So then where would you actually find then the information that is required? That information is defined in the regulations. So for every report type, there are regulations relating to it, and there it is defined what is the minimal client information and transactional information that you would need. And just to remind you as well that the FIC does not allow you to deal with anonymous clients. So at the very least, you are expected that if you are dealing with a natural person, you would have their name and surname as well as then their ID number. So the information that you'd need then for reporting would have been information that you would have obtained as part of then your client identification and verification, as well as then the actual transaction or activity details that you would have obtained as part of that transaction or activity. So just to go back to what I was saying in terms of the parties that are involved in a transaction. So as I mentioned, for every transaction, when you are submitting a transaction report, you need the payer and the payee. So the from side, that's then the payer, and then the to side, that's the payee. So for an example, with the first line, if a natural person comes and makes a payment at your premises as the entity, that transaction would be from my client person. And remember, since this is your client, you would have the full details. And so it would be from my client person to my client entity. And then you would be providing the details of your entity as you are the ones receiving the funds. Now, if that same natural person made a deposit into your bank account, how you would report that would be from my client person to my client account, where you would be disclosing your bank details. Same principle would occur then if it's the funds are received from an entity or from an account. Now, if you as the entity were the one paying the person or an entity out, that transaction then would be from you as the entity, if then you are doing a payment from your premises, to then my client person if you are paying that person cash. If you are paying the funds from your bank account to the client bank accounts, then that would be from my client account, where you disclosing your bank details, to then the banking to the account of the client, where you would be disclosing the account details. Just to note as well that, people always ask, but why should I report? Because if this transaction goes into an account, to a bank account, then the bank would have the details. Remember that you as an accountable institution, you have a reporting duty. And when there's a deposit made into your account, the bank would report your business as receiving the funds. However, they do not have the details of your underlying client. So then they would be reporting you as the entity receiving the funds. However, you need to complete the picture by providing them the details of that particular client. So that is what we call dual reporting, or then complementary reporting. So you need to report and the bank needs to report. So I've taken you through the elements of what is required to submit reports on the system. I just want to take you through the layout of how actually then this report look on the system. So I mentioned transaction reports and I mentioned activity reports. Now, transaction reports are actually reports that are based on a transaction. So for an example, we have reports there like your cash threshold report, and also including then the cash threshold report aggregation. We also have the suspicious and unusual transaction report and the terrorist financing transaction report. So you can only submit these reports if then there was a transaction that was concluded. So when you're submitting on the system, you have to select the report type. So the report type, you have to ensure that then, it is then what you are trying to report. In certain instances, you might find that one transaction falls into different types of report types. For an example, your client might do a cash deposit of, pay an amount of 50,000, but then you also find that transaction to be suspicious. In that case, you'd submit 2 reports, one report for the cash threshold report, and then another report for the suspicious and unusual transaction report. So you cannot submit 2 different report types in one report. So the report type, as I said, you'd have to select. The reporting person is the person that is logged in. So as we mentioned, for you to be able to report, you have to firstly be registered with the FIC, and then you need to log into the GoML system to be able to submit report. We'd like to remind you of then the directive 2, which then states that login credentials cannot be shared. So for all the people in your organization that need to submit reports to the FIC, they must all register, have separate accounts. You must not use one account for all your different users. Then one of the elements that is needed is the location. So that is the transaction location. So where did the transaction actually occur? And then you also need to select an indicator. So an indicator, there it's basically you just select what is the same as the report type. So if you are submitting a cash threshold report, you can just then select the indicator as CTR. In addition to that, it is also then to include information that you might have about the transaction. So for an example, if then you find that that transaction is linked to tax evasion, or it's linked to poaching, or linked to smuggling, you can select an indicator if you do suspect what the transaction is required. So you can have more than one indicator, but if you do not have that information, just select the one that is the same as the report type. Then you would have to provide the information about the actual transaction. So remember, I did talk about the two parties that you need to have, then the from, which is the payer, and then the to, that is the payee. You'd also then need to disclose goods and services if there are any. So this slide is basically showing you what I was showing you in the previous slide, but this is how this report would look on the system now. So certain information will be pulled into the report based on who is logged in. So then, like the entity information, that is the information of the entity that then that person who's logged in belongs to, and then the reporting person, that is then the person who's logged in. Then you have details like the location as well, so which is then where the transaction occurred, and then you have the indicator. As I mentioned, you can select more than one indicator, and then you actually have the transaction details. So what actually happened? What is that transaction? So yeah, so as I mentioned, it's the transaction details that you disclose, and then the parties that are involved in that transaction, the from, which is the payer, and the to, which is the payee. So I was covering the transaction reports, which is where the transaction was concluded. We are now moving to the activity reports. So activity reports, that's where a transaction has not occurred, but you're actually reporting an activity. So there might have been an attempted transaction, or a transaction was aborted. So you are reporting an activity or behavior. So here we are dealing with report types like then the suspicious and unusual activity report, the terrorist financing activity report, or the terrorist property report. So you will see that in terms of the layout, some of the elements are the same. For an example, when you log the report, you'll have to select the report type. So then to indicate which report you are reporting. And then, as I mentioned, the reporting person, that's a person that is logged in. Then you need the location, which is where the transaction occurred. And then you need to select the indicator. And then for the activity, you need to actually report the actual activity that occurred. You also need to report the reporting party. So you will see that with an activity report, because this person or entity might not be your client, you'll see that in terms of the fields that are required, it's very minimal information. So you only report the information that you do have. Unlike a transaction report where, because you're not allowed to transact with someone who's not your client, there you have to provide the full details. So that is how the activity report looks on the system. As I mentioned, first thing is always then the report type, and then some of the details like the entity and the reporting person would be pulled from the information of the person that is logged in. So there you have then your indicator and then your activity. So for certain types of report, like your suspicious and activity report and your suspicious and unusual transaction report, you have to provide the reason for reporting. So that's your grounds of suspicion. So why are you actually reporting? What do you find suspicious about that transaction or activity? You also have to report the action that you took as an organization once then that suspicion was established. So you might have reported to maybe the police, or the only thing that you did was to report to the FICA, which is fine, you can specify it there. But those two fields, for then a suspicious and activity report and a suspicious and unusual transaction report, you have to specify, otherwise your report will be rejected. Okay, so yeah, so we showing you the layout there. So there we dealing with the reporting parties. So that can be a person or an account or an entity. And as I mentioned, I mean, you need whatever details that you have there. So it's minimal details. You don't have to have full details. And then goods and services. So that is if there are any goods and services that were involved in that transaction.
Thank you, Khanyisa. Something that I think is very important that you mentioned and demonstrated in the presentation is that the reason to report must really be as comprehensive as possible. I cannot imagine it would be very helpful if you as the FIC receive a report that says something was suspicious, but there's no elaboration on what was suspicious or unusual, for example. So I think the more information that can be provided that is comprehensive will certainly put you in the best possible position to analyze and make sense of what the intelligence tells you. So that being said about the information that's required, there are questions from the viewers about how to actually capture and submit a report to the FIC. So I'm going to hand over to Khanyisa again to take us through the process of how to actually do this on the system. Khanyisa.
Okay. Thanks, Michelle. So as we mentioned before, all then the reports have to be submitted on GoML. So that is the FICS registration and reporting information. And please do note that if you are not registered, you would not be able to access the information or the platform to report. So you need to be registered with the FICA. So everything has to be done on the system. And please do note that if, you cannot submit a report using any other means except then the system. So you cannot send us a letter with then the details that you want to report, or maybe, through our query process, send us then the details of the report, it has to be done on the system. If it's not done on the system, then it does not count as being submitted to the FICA. So the screen that we're showing there, that is on GoML. So you log in, you will see the screen. And then if you look at the first menu there, it says new reports. That is then where you would be submitting reports. So now when it comes to reports, there are different ways of submitting reports to the FICA. So the first one then is the web, or what we call manual reporting. This is when you log into GoML and then you capture the report on GoML. Now this method is actually very suitable for small organization where you don't have big volumes of reporting. So it allows you to just capture and submit to the FICA. We also have batch reporting. This is for our big reporters, like your banks, where they have a lot of transactions per day that need to be reported. So they use batch reporting, but do note that this involves programming, because those reports have to be they have to conform to then the FICA format. But like as I mentioned, if then you're a small organization, it's actually easier for you to do the capturing on the system. So as I mentioned, when you need then to submit a report on the web, you select then that menu that says new report. And then if you see now the report on the screen, you'll see that it's actually the screens I was showing you in the previous screens. So some of the information will be pulled in for you, like your reporting person and entity information. However, you will need to capture some of the information, like then the party types, as I mentioned, and the transaction or activity information that I mentioned. So once you have captured that information, you must press submit report. When you do submit, that report goes to the FICA for processing. The other option that's also available on the system is that if now you're busy capturing a report and then you need to take a break for whatever reason, then you can actually save the report. It will then move to the drafted reports and then you can go back to it and complete it. But just note that if you do save it, please do not forget it there without submitting, because it only comes to the FICA for processing once you press submit report. So once you have submitted then the report, you will see there, it will come like at the top there, it will give you the report ID of that particular report. And then it will notify you that the report has been submitted. So then that's where you see that actually the report has been submitted to the FICA.
Thank you, Khanyisa. So I can imagine that if I'm an accountable institution and I file the necessary reports as and when, especially maybe like you say, sometimes I draft a report and then I get busy with something else and it's easy to forget about it. Is there a way to monitor the reports that I've submitted to FIC?
Yes, definitely, Michelle. So there are menus that are available on GoML that actually help you track your reports that you submitted to the FICA. So one of the menus there is the submitted reports. So this menu shows you all the reports that you've submitted. So it shows you when, on which date did you submit them, and then it also shows you the status. Now, if then the status is saying processed, that means that report was successfully submitted to the FICA. If the report is saying rejected, that means it was rejected and you will need to remediate. I will touch on remediation data. Just note as well that at the top of this page, there is a date range. So you can actually run them for the dates that you want. And also please do note that we do get requests from entities sometimes where maybe there's an inspection coming up or they are auditors and then they want the FIC to provide them with the copy of the report that they've submitted. Please note that as the FIC, we do not share any report details with third parties, even if you were the one who submitted them. So it's very important to keep track of your reports that you submitted. There you see there's a save button, so you can actually download your reports there. You can also just download this whole screen to show all your different reports, but you cannot ask the FIC because we will not be able to provide you with that information. Also do note that when it comes to downloading information on this menu, especially when it comes to process reports, it's only available for 30 days. So it's important that from your side, you keep then a copy. So you download those copies on a regular basis. Okay, so in addition to the submitted reports menu, which I just showed you now, that shows you all the reports that you've submitted to the FIC and then their statuses, we also have the message board. So every evening, you will get, when you've submitted reports, you'll get notifications to the message board to tell you the outcome of the processing of your reports. So you might then have reports, so where it says fully accepted, that means those were successful. So you will check that, and then that will be your record. You'll also then get some that are rejected, and then through the message board, you will see, what the reasons are. So with the message board, you'll get the message, you can see the subject, which then shows you, and the type which shows you, and then there's also an attachment that you need to open for details. So as you see there, we're showing you the attachment, so you just need to open it to see what it says. So then for a report that's accepted, then it will tell you the details that, of those reports. So as I said, you'll only get this once a day, and then it will summarize then all your reports that were successful in one, attachment like this one, and then the ones that are rejected, it will summarize in the other attachment. So with these as well, it's best that you download these because these are only available from the message board just for 30 days if the report was successful. So just download this for your own records. Okay, so a report can also then be rejected. So if then a report is rejected, you will get then the notification to the message board. So basically this message will tell you which of your reports were rejected and what were then those reasons for rejection. So if you look there, it will tell you why that particular report was rejected. So for an example, maybe you were submitting a CTR and then it was less than 25,000, or your client, you were reporting your client and it didn't provide an ID if they are South African. So you will then use this information to remediate your reports, but I will touch on that just a bit later in terms of how do you actually remediate.
Thank you, Khanyisa. So it sounds like just because I, as an accountable institution, submitted a report, it doesn't mean that it was accepted. It could also be rejected. And the message is to go check the message board at least once a day, pay attention to the information communicated there, open the attachments, save for your own records, and there is a time cap on it in terms of the 30 days. So that's very valuable and practical information, which brings us to the question of rejection of a report. You mentioned that the FIC can reject a report, and you showed us an example. But take us through what happens then if a report is rejected. What must an accountable institution do?
Okay, yes, so a report can be rejected by the FICA system. And the reasons why it would be rejected is that that information would not contain all the information that is required for that particular report. So we mentioned the regulations which then specify what information must be contained per report type. So if there's information that you needed to provide as the reporter, but that was not there, that report would be rejected. So for an example, if you are reporting your client and that is a natural person, and then you don't provide their ID number if they're South African, or passport if they're a foreigner, that report will be rejected. It can also be rejected if you do not provide some of the transaction information that is mandatory. And also then you might have made mistakes where you are submitting a suspicious and unusual transaction report and you did not provide the reason for reporting. So there are many reasons, but it's very important for you to actually go through the slides where we talked about the information that's required for reporting, and make sure you have all that information beforehand. Now, for a report to count as being submitted to the FICA, it must contain correct information. It also then must be successfully processed by the FICA system. So if it's rejected, it means it was not successfully received by the FICA and it does not count as being submitted. So you as the reporter would then need to remediate that report or to fix that report. So how do you actually then do the fixing? So you have to go to the submitted reports menu that I showed you earlier, where it shows you, the status of your reports, and then you have to select that report that was rejected. You must revert it, and then you need to edit and correct that report and then resubmit to the FICA. So how would you actually know what to correct? The notification that you received from the message board would have told you what was wrong with that report. So you need to correct what was mentioned in the message board. Do note as well that in terms of the message you received from the message board, it might be more than one reason for that particular report. So you need to look at all the reasons and then correct them and resubmit the report to the FICA. Please do note that in terms of the remediation process, you need to follow this way that I've just told you now on how to remediate. Do not submit a new report, because if you submit a new report, it will look like you have never then corrected the one that was incorrect. So that one will always look like it is outstanding. It will also then create duplicates on the FICA system, because now we'll have two different reports with the same information. So then just basically showing you the screens of what I've just said in the previous slide. So how you'd actually know that a report is rejected, it's through the notification that you will receive through the message board. Then you will open that notification, and then in that notification, it will show you why then that report has been rejected. So you will have then the reasons of why it was rejected, and then you would need to correct those. So to correct then, as I said, you go to the submitted reports menu, you select that report that was rejected. Then you select revert, and then that report will move to the drafted reports menu. So this is where then you will go in, edit the report, and then resubmit to the FICA.
Thank you, Khanyisa. So there are solutions. There's no reason to remain non-compliant, because a rejected report means non-compliance. It's the same as a report that was never filed. And you've now clearly explained that remediation is possible, and there is quite a simple process for this. So now that you have all this information that you received as the FIC and you analyzed the reports and the reports were accepted by the system, we often get questions whether the FIC provide updates to unaccountable institutions of what happens after you receive the report. Philip, can you tell us what happens?
Thank you, Michelle. Yes, the short answer is no. The FIC wouldn't give you an update about the progress of the report. As I've mentioned earlier, the reports are all grouped together and they are then combined with other sources of information. So although we do not give you an update on exactly the outcome of each and every report, it doesn't mean that these reports are not important. It might just be the last piece of the puzzle to solve a crime or to provide additional information to assist the law enforcement agencies. What we could do is, and I've mentioned that earlier, is that we can ask for additional information in terms of Section 32 of the FIC Act to enable us to get a clearer picture of what happened in a specific transaction or with a specific person. Yes, so yes, we can ask for additional information. The other question, shouldn't AI continue to file a report even though the prescribed time frame has elapsed? The answer to that is definitely yes. Late reporting is better than no report at all. The consequences in terms of the law is also different from non-reporting. So if you realize that there were reports that should have been reported, or and you've missed it, then you must approach us. We have a specific process. We refer to it as the Directive 3 process, whereby you then inform us that you haven't submitted some reports. We then engage with you, and we go through a process where we enable you then to go back and submit those additional outstanding reports. So yes, even if you haven't submitted before, you should have submitted. Please approach us so that we can address that, and we want those reports. Thank you.
Thank you so much, Philip. I think this was a burning question in everyone's mind, but I think you resolved it. So with you being the experts receiving these reports, I'm sure on a daily basis you do come across some common mistakes made with regards to reporting, and what better opportunity to learn from the mistakes of someone else to prevent me making the same mistake again. Khanyisa, what do you guys see when you receive reports? What are some common mistakes made?
Okay, yeah, so we definitely do see some mistakes being made when it comes to reporting. Firstly, I would say the non-adherence to defined reporting timelines. So if you all remember, when we started this presentation, we actually then took you through the different timelines for the different reports. So for an example, for a cash threshold report, you need to report that within 2 days of the transaction. And for your suspicious and unusual activity report, your transaction report, you need to report those within 15 days. So you need to ensure that within your organization, your processes actually allow you to submit then those reports to the FIC within those timelines. So, but as Philip has mentioned as well, though, if you notice that you have then missed the timeline, it's still better for you to then submit those reports to the FIC. So rather submit late than not submit at all. But the ideal is that you submit them within the defined timelines. The other mistake that we note is that entities don't always identify the products and services that might bring, that might then make a report to be submitted to the FIC. So for an example, then, some of the businesses, because they have maybe a cash limit of, let's say, 5,000 Rand, or they don't receive cash at all, they don't now monitor those same transactions for then your suspicious and unusual activity or transaction report, because for a suspicious and unusual transaction report, there is actually no monetary value assigned to that. So you can even, like, report a transaction of 10 rands. But if there's anything that's suspicious there, so you need to know what are your products and services, and how would you actually know that there's, a reportable event has occurred. And it's important to actually include all this information in your RMCP and have then processes to enable you to report on a timely basis and enable you to identify when a reportable event has occurred. The other mistake that we find is that information is not always completed in full. So you find that a report has missing client or missing transaction information. Remember, we did mention the regulations that specify what information must be provided. So at the bare minimum, that information has to be provided when you report to the FIC. There's also information that we call readily available information. That's information that the regulation might have specified as optional. However, you would have obtained it as part of then then doing that particular transaction, or in the course of then doing your business. You need to report all that information to the FIC. And the other thing that we do find is that reports are not always checked before being submitted to the FIC. So once you have submitted a report to the FIC and it is successfully processed, you cannot change it afterwards. So that means before you actually submit it to the FIC, just double check it, make sure that the client details are correct, make sure the amounts are correct, make sure the dates are correct. So double check, make sure everything is correct. We do have OML Notice 4A, which actually then tells you how do you actually deal with instances where you have submitted a report to the FIC and it has been successful, but you find that afterwards that there is actually something wrong with that report. So we do have a process for that, but please just double check before submitting to prevent then, those errors. The other mistake that we find is that when reports are rejected, they are not always remediated. So just ensure that you do check then your reports, and then check your message board on a regular basis. And then if then you find that a report has been rejected, ensure that you do remediate it and resubmit to FIC. Do not submit a new report, but remediate the one that is rejected. Thanks, Michele.
Sure, thank you, Khanyisa. So I think this is so helpful because these can be taken as lessons learned to maintain compliance. We said at the beginning of the webinar that the purpose of the session is to improve the level of compliance with the reporting obligations. And certainly there's some very practical lessons to be taken from this, particularly to avoid the consequences of failing to report. So it is obviously, as we said also at the very beginning, there is a legal regulatory obligation on the accountable institution to report in terms of the Act as read with the regulations. We've taken you through the kinds of reports. We've given you details about the information that must be reported, how to capture a report, how to monitor the reports that you've submitted, and the common mistakes made. But if that is not all taken into account and harnessed and implemented, you might find yourself as an accountable institution standing in front of the door of consequences. And these include, as Philip also alluded and explained, to the Directive 3 process. So where there was reporting failure, you can and should approach the FIC. so that you can inform them of the breach and the failure, the root cause, what you've done to remedy it, so that they are aware, and it gives you the opportunity to correct that mistake. It should be noted that that process does not constitute condonement, and it may attract enforcement action or an inspection or ongoing close monitoring by a supervisory body. So certainly, first of all, comply, make sure you're in the timelines, make sure your RMCP helps you to understand what to report, how to find it and identify it, and then use the information in this webinar to make sure that you actually file the report correctly to avoid this consequence. So I would like to highlight that in terms of the FICA Act and the regulations, some of the contraventions related to failures to report may attract administrative sanctions, but some are so serious that it's actually considered an offence. And offences and penalties are dealt with in Regulation 29. So unfortunately, this is part of life. There is serious consequences for serious failures. And the best way is to avoid this failure. Make sure you know what to report, when to report it, and how to report it. And certainly, if you maybe forgot how, use the information in this webinar to refresh your memory. Khanyisa, you mentioned earlier that there are some user guides and manuals on top of this webinar that we are hosting now that can assist the accountable institutions, be that in terms of processes they might want to include in the RMCP, or to refresh their memory, or to have a quick lookup while they're busy filing a report and maybe hit some snags. You want to take us through that?
Thanks, Michelle. We definitely have a lot of material that is available on the FIC website. So that's www.fic.gov.za. We have user guides for all the report types. So it's a user guide per report type. And then those user guides, they show you screenshots. So step by step, how do you actually then submit the reports to the FIC. We also have all kinds of other material on the website, like guidance notes and PCCs that deal with registration and reporting. So in addition to the user guides, we also have videos that actually show you how to capture a report. So they'll show you how to capture a CTR or an STR. So those really help then in guiding you with how to report. So in addition to that, okay.
No, thank you, Khanyisa. I just want to quickly flip to your contact details. So basically, these user guides can be found on your website, you said?
Yes, so they can be found on our website. So as I said, we also have then that YouTube channel, which you can also access through our website or through YouTube. So in addition to that, if you are still having issues in terms of reporting, you can actually then contact us through our contact center. So we are showing you the number there on the screen. We also then have a query platform that you can access on our website. So it is then on the menu, contact the FIC, and then there is a compliance queries tab. So that's where then you can log any then like a request, or like where you need clarification then about then your report. So you can log then your queries there, and then we will then assist you and provide you with guidance.
Sure, thank you, Khanyisa. This is so helpful. And I think this webinar is so important because us, as the FECA, being a supervisory body, we take our obligation serious in terms of making sure the accountable institutions that we supervise comply with the FICA Act. We understand how important the reporting obligations are, how it eventually translates in everyone working together to identify and help assist to identify the proceeds of illicit and illegal activities and money laundering and terror financing. And that's important to us and for everyone in this country. This really should be something of great importance. So our contact details as the FSCA are also available there. As I said, Violet explained in the beginning who the accountable institutions are. So if you are an FSP or you are a CIS manager and you are supervised by us as the FSCA as a supervisory body, take note that we are responsible for performing supervisory activities like inspections. We're definitely going to come and have a look whether you're compliant with your reporting obligations, and we wouldn't want to find you at the door of consequences. So make sure that you contact us if you have questions, and we are very happy to assist. I think this has been a wealth of information that will only assist you and you can only benefit from. I would like to take the opportunity now to thank my colleagues, Violet and Khanyisa and Philip, for spending this time together. I hope you find it valuable as an accountable institution, and you have our contact details, so please don't be afraid to communicate with us. Have a good day. Bye-bye.